How's it going, everybody? Welcome back to the channel. It's Jose, and let me tell you guys something, that this has been one of the craziest few weeks in the stock market since I've started. And I started around the beginning of 2017, and there's been a few times where the stock market's been goes down a lot, but then it comes back up. But let me tell you that since the beginning of last week, I've never seen a stock market go down thousand after thousand after thousand points and goes up 1,000 points and goes down 1,000 points and goes up 1,000 points. Oh my god, it's been crazy. The volatility is crazy. And maybe for you guys that are in cryptocurrencies, this is probably nothing for you if you're investing also in stocks. The cryptocurrency markets are insane as well. I've seen those go up 40%, down 50% very fast. And so you guys don't have to worry about anything. But let's go over my portfolio. That's what's been going on with my portfolio. As you see right now, I'm at $25,349.53. You can see that I was down $1,894.02, which is 6.95%. And after hours, I'm down 9.15, which is 0.04%. And in the past week, I'm up $4,194.91, which is 19.83%. But in the past month, I'm down 8.84%, which is $2,458.27. At the highest point, I was at $36,338.28, and right now I'm just about $11,000, just about $11,000 down from the highest point. Past 3 months, I'm up $25,349.53, which is $12,020.34, which is 90% in the past 3 months. And in the past year, I am up $15,950.73, which is 169.71%. When I started this Robinhood account, I put in $4,000. I kept putting in money once in a while, every time, and the total amount of cash that I put out of my pocket was $10,495. That's the total amount that I put in my portfolio. As you can see all the time, it won't show you exactly how much it is. Oh, just never mind, just right there, $10,480. Sorry, $10,480 is how much I put in there. And I started in February, so it's been more than 3 years since I've been on Robinhood. And even Robinhood had some crazy problems this week, which is that on Monday, I believe Robinhood was down the whole day, and I feel so bad for everyone that had options and that were day trading and doing all that stuff with Robinhood, because you couldn't do anything the whole day. Even on Tuesday, there was like an hour or two, I think, that you couldn't do anything. Luckily for me, it didn't really affect me because I do not trade options. Since I did that Facebook option and lost a ton of money, that's the dip that you see from right here to like right here. I do not do options. Maybe in the future I'll do it, but not right now. I'm just a long-term investor. I put my money in high-risk companies I believe have a good chance to do good into the future, long-term. And let's go right into the holdings that I have. First one I have here, Activision. As you can see, I have 15 shares. My average cost is at $48.52. And in the past month, I believe Activision was at $64. It hasn't really been affected that much by this virus going on. And as you see, my total return is 26.79%, 1.83% portfolio diversity. Haven't had any opportunities to buy since I put money into it. And yeah, I'll just continue to hold on to this one. If I ever see an opportunity to buy, I'll buy and I'll let you know. The next one I have here is Square. Square, as you can see, down 3.71% just today. Past week, just barely breaking even. Past month hasn't really been affected. The highest it's been is 85.70. My average cost is $70. I am up 8.16%. I have 11 shares. You see my equity, my portfolio diversity down there. Facebook, it is at $184.85, down 3.44% today, and it has been affected by this virus. As you see, the highest point being 217, I believe it hit its 52-week high. 224 maybe? 224. Let's see. Yeah, it hit its 52-week high on January 29th. So since 224, it's been down about $40 since its 52-week high. It's a pretty large dip right there. Let's see. From right here to where about now, it's at down 17% from its highs. So 17% down from its highs. I believe I have been buying some. Actually, see, yeah, I bought some here. You can see this is the option that I lost lots of money in a whole year ago. But you can see that I haven't bought anything since. And February 11th, I bought one at 208, then I bought one at 201, then I bought one on 191, I believe. If my Facebook gets down to under 180, I'll probably buy another share. Facebook, very, very good company, very strong, lots of growth ahead of it, even though it's insanely big already. It is a $548 billion market cap company, huge. Next one I have here is NVIDIA. NVIDIA at the highest at 314. So at the highest point I believe was 316.32. That's what it says right here. Is that the 52-week high? Yep, 52-week high of 316. And the lowest point it had was 241. It had went as low as 241 on February 28th. So you could have got this company for, let's see, 19% swing. Maybe a little bit more if you come from the highest point to the lowest point, maybe more than 25%, but that's a big dip right there. As you see, it's slowly, most companies are slowly recovering, even after today. Today was a huge dip in the market. At one point was down about 1,000 points. It's crazy. Next one we have here, Tesla. You see Tesla. I have 39 shares. My biggest holding so far. My average cost is 281. I believe my average cost was at 240 before I bought like 2 or 3 shares at $600 and $700 because it went down, so I wanted to buy some more. Tesla is my ultimate pick. I believe in this company. Probably won't sell out of this company in the next 5 years. As long as they can continue to execute, I'll keep buying as I see the dips coming. There would be lots of volatility when it comes to Tesla, and those are just going to be the opportunities to buy if you haven't. And let's look at the right here. It was at $968 at highest point around here. $968, and it went all the way down to $611. So you could have got, if you sold out 940, 950, 960 and bought in around 650, that's a $300 swing right there. You could have got a nice, great deal right there. And let's see, actually, when I bought some at 728, 686, and 630. And what was the lowest point? 611? Yeah, 630. I got that one share at a good price at 6.30. If I had more money, or if they actually gave me the access to get partial shares, fractional shares, then I could have easily gotten way more. But you know, can't get too greedy. Let's look at the next one. Uber. I have 39 shares. My average cost is $35.95. I am down 10% exactly. Uber. Highest point was I think the highest point was, let's see, what was the highest point in the past few months? Highest point was 41.86 and the lowest point being 31. Let's actually see. 20% swing right there. You could have got a pretty good discount if you wanted to get into Uber. And it seems that the coronavirus, to me, seems that it will probably get more worse, because it seems like every day spreads exponentially spreading. As one person gets it, it spreads it on to 2 and 3 and 4, and we haven't seen anything being done about it yet, except they're telling people to wash your hands and doing everything. So it might get a lot worse before it starts getting better. So like I said in my other video, I would not be surprised if the Dow hits 22,000. I would not be surprised. I believe it could drop another 4,000, maybe even hits 20,000. Because when earnings comes out, and this still hasn't been handled by then, it will tank even more if investors see that it can last more than 1 quarter, or more than 1 quarter. Imagine if it lasts 2 or 3 or a whole year. This could be a 1 year to 2 year that the market stays down. So it is actually a very good time to be a dividend investor. If you are a dividend investor, good for you, because when the stocks go down, the dividends go up, and you guys are still getting paid. And I'm going to start working a lot more now, or I'll try to start bringing in income. I still have to pay off my car. That's why I haven't been putting any money into the stock market. But I really need to get on my grind now. I'll probably be doing a video every single day, updating on the portfolio, on news, on everything. Maybe make this a daily series. As soon as the markets are up, I'll post videos of my portfolio and how it's doing, especially since I'm in very high risk companies: Uber, Tesla, Square, lots of cannabis companies. I have 3 cannabis companies: Aurora, there's Roku. That's not a cannabis company, but I got Roku is a very, very risky company. There is canopy growth and innovative industrial properties. Roku, I am down 14%. I believe this company's been going down since November. The 52-week high being 176, and it now being 106. If you wanted to get into Roku, might be the time if you want. And it hasn't hit its highest point since September of 2019. I'm just going to be writing it out. Next one, IIPR. We're into my cannabis holdings. My average cost is at 103. I'm down $150 at 7.26%. Next one, Aurora Cannabis. I'm betting big on Aurora Cannabis. My average cost is $1.88. I'm down 29.76% at $2,543. I am betting huge on this because in the past year it is down 82%. 52-week high being $10.32, and it being $1.32 now. If it ever rebounds, it'll do very good for me. If it doesn't rebound, then I played the risk. I bet that it would go up before it goes bankrupt. If I believe it can go back up, even if it goes up to $3 or $4 or $5 in the next few years, it'll be worth it for me, since my average cost is $1.88, and I'll probably try to get that down to, if it continues to keep going down from now on to like $1, I can probably get it down, my average cost, to $1.50, but it'll bring my equity up a lot more. And then I have Canopy Growth at, it's at 16 right now, with my average cost being at $23. This is another one. Canopy is more safer than Aurora Cannabis. It has the cash to survive. Aurora Cannabis doesn't have that much cash left. It needs to get a lot of things done, and it has a lot of trouble going on. But like I said, it's a high risk, high reward thing. Canopy is more safer, but still kind of really has a lot of risk to it, but not as much risk as Aurora Cannabis has. And a few companies that I'm actually really interested in maybe purchasing. Honestly, Planet Fitness, I'm very interested in getting Planet Fitness. It doesn't have a dividend, but the P right there, you see market cap. But in the past year, you see it's dropped down a lot. If it gets down to around here, if it goes under $60, I will buy some shares of Planet Fitness. I've been to Planet Fitness before, so I know what's going on. It's cheap. Lots of people go there. It's always packed when I go there all the time. Lots of people going there. Haven't been there recently though, so I don't know what's going on, especially with this virus. I live close to San Francisco, and right now there are cases over here now. So if you're out there where there's any cases, be careful. Wash your hands all the time. Don't do anything stupid, you know. The other two that I'm interested in is AMD and Shopify. But these already are up a lot in the past week, up 18%. So unless it goes back down to under, I wanted to hit under $400 before I even consider it. If it's under $400, then I can probably buy some. For Shopify and AMD. AMD also in the past week up 20%. For me to buy this, I wanted to hit, like I said, I wanted to hit a very low, maybe low 40s or under 40 would be beautiful for me to get some shares in, to get my feet wet. AMD, it's getting big. It's competing against Intel now. It's gonna start it's taking away market share from Intel. Those are the few that I'm actually interested in. There's also some over here, but most of these are REITs. I wanted to get a REIT portfolio. I wanted to get into M1 Finance. I sent them copies of my personal information so they can get my account started, but I haven't heard from them since. So I'll update you guys on that. I'll probably bring a daily video on my portfolio, just because my portfolio is so super volatile that you see these super huge swings from just less than a month ago. I was at, I think the highest was at like 37 or 38,000 to now being, and there was a point where I was under 20,000, I think, or around 20,000. So it's super crazy to see the numbers. I don't really care about it. I know in the long run that the stock market will go up. So just be calm. I don't think it's a good time to sell out of everything right now if you haven't sold it already. If you haven't already sold anything, I don't think it's a good time to sell. The stock market might continue to drop a lot more, but if you haven't sold out already, probably because you're not gonna sell out at all. Okay, so that's it for the little review of my portfolio. I'll bring you guys another one tomorrow. So hopefully you guys are buying as much as you can whenever there's dips, because there has been quite a lot of dips, 1,000 swing to dips on both sides. So I'll see you guys in the next one. Be careful out there.